What's up, Law Nation? It's another beautiful day to be alive. So happy that you can join me today for another episode of the Passive Income Attorney Podcast. Don't forget, when you have a few moments, go check out escapethebillable.com and snag our free passive investing guide. It's absolutely free. You guys have nothing to lose. So here on the podcast, we preach that real estate is a long game because typically it is. You invest over time, generate cash flow and income replacement in the near term, then appreciation and wealth in the long term. However, if you have some significant capital to get started and are able to leverage the time and expertise of the right people, you can quickly accelerate the process to financial freedom. Our guest today has unlocked this formula to go from house flipper to passive real estate investor to scaling into 200 plus unit apartment complexes in really just a year's time. 1 year. During the pandemic, all while working a full-time W-2. It's really incredible. Hemal Badiani is the founder and managing partner of Exponential Equity, which focuses on his passion of helping busy families achieve financial freedom through fantastic opportunities in commercial real estate investments. Prior to establishing Exponential Equity, Hemal provided management consulting services to several Fortune 100 companies across 3 continents while creating a portfolio of businesses that he successfully scaled and exited. Now, on to the show.
This is the Passive Income Attorney Podcast, where you'll discover the secrets and strategies of the ultra wealthy on how they build streams of passive income to give them the freedom we all want. Attorney Seth Bradley will help you end the cycle of trading your time for money so you can make money while you sleep. Start living the good life on your own terms. Now, here's your host, Seth Bradley.
Hey, what's going on, brother? Welcome to the show.
Thank you for inviting me. It's been such a pleasure talking to you.
Yeah, for sure, man. We've met up a couple times and really happy and excited to have you on the show.
Yeah, I'm excited to be part of this journey of yours.
All right, man. So let's just jump right in. Tell us a little bit about your story and, feel free to brag a little bit.
Well, more than bragging, I'm super grateful and amazed about my story, and I like it every time I tell it. So my background comes from a management consulting side. So I grew up in a family of businesses. When I landed here in the United States from India a couple of decades back, joined a consulting firm, traveled 3 continents, worked with a lot of Fortune 100 CEOs and CEOs and the leadership to pivot their businesses and help them scale, help them bring efficiency, help them bring new products or new ideas to the market, and help them with growth. So when it came down to internalizing some of that for our business and the way I wanted to structure our company, it was really, really interesting to see what ideas and thought processes and structures and systems that I wanted to bring to the table. I always thought about, not just doing a transactional business, but actually building something that as an entrepreneur, not a small-time business owner, and, building a business at scale. So last 3 years, I focused on single family flips, and got into that business a little bit. And then come 2020, I exited a very profitable flipping side of the business to jump right into commercial asset classes across the board. Heard about syndication the first time in 2020, and I was fortunate enough to go into a couple of events right before COVID hit and find a couple of mentors, invested the time and money, and jump right in passively. So my first passive investment was in April, right in the middle of COVID. Nobody knew what was going on. But for some reason, I just got the clarity that, multifamily investments, especially just the macroeconomic trends are so amazing, that these investments are sound, predictable, safe for my own money. So did about 3 passive investments, and then jumped right into the active side. Was doing a 1-2 punch, finding a consortium of operational partners that bring the decades of construction experience and industry experience while building our own team of partners and team members that allowed us to scale again and bring the structure and rigor. So, long story short, closed on two deals in September, one 208 units in Tulsa, another 128 units in Louisiana. We're about to close next week, December 14th or 15th, one deal in Illinois, about 64 units. And then we have two under contract, one in Winston-Salem, North Carolina, pretty close by to us in Charlotte, and then one in Dallas. So excited about the momentum, the team, and the structure we have so far, and looking to not only build in the multifamily space, try and do 3 deals a quarter, but we've expanded into land acquisitions, and looking at other asset classes like office, triple net leases, even hotels next year. We'll see.
That's incredible, man. How do you think you're able to scale that quick?
It was finding those principles of those CEOs that I learned from, right? So one was, like I said, the vision, right? Many
Mhm.
people invest for the fact that they want to have financial freedom, and which is a fantastic motivation to invest in. But that means you'll focus on one or two transactions, how to maximize. You do the math and say, hey, I need $10,000 a month to run my home. Well, how do I get that in 3 deals or 4 deals, right? And for me, I had the vision, and I always do, is to build $1 billion company in 18 months. And for that to happen, you got to think about, who are your repeat investors? How do you think long term? What type of team members and partners you want to structure, and what type of due diligence processes, systems, and teams, and relationships you need to build. So the approach is a little different, longer term thinking, and that's the first part. And then making the right decisions to for action, and going by the gut, understanding where we are, continuously evolving, as we grow as a team. We have a team of 5 now, and hopefully the 6th member will join next month, from an investor relations standpoint. And then trying to pivot left when everybody's turning right. That's the other component that we've had to differentiate ourselves, on how we bring above average returns for our investors.
Yeah, it sounds like you had a really clear vision of what you wanted and what the end goal was, which was to create, a certain amount of passive income over, a certain amount of time. And in
Yeah.
order to do that, you built a team and a system, and most importantly, you took action.
Yes. Yes. And doing
Yeah,
things the right way, right? You got to build a brand that sustains for the next decade or two. If you just are focused on 2 or 3 opportunities and investments, the way you focus on them, in my mind, is different. If you focus on, does this investment create a brand that would last 10 years from now? Folks who are investing with us would still 10 years from now say, Hamel and his team have done a fantastic job, and I would recommend them from an investment standpoint. That's the type of trust and credibility we have in the market for our previous companies and work that we've done, and that's a trust and credibility we want to build in the business.
yeah. In a real estate syndication business, and really any business, I mean, your reputation
Yes.
matters so much, and
Yes.
especially, like I said, in this business where you have investors that are just going to keep repeating and investing with you, then you've got to do things the right way.
Yeah. Yep.
Let's rewind a little bit, man. So, any particular reasons you jumped out of flipping in single family?
Yes, it was tough, to exit that business because it was profitable but transactional.
Yeah.
Honestly, it was sucking up a lot of my time. So again, I could have done a couple of flips, a couple of assignment of contracts a month, and be fine, relatively speaking, from an income standpoint. But way I think is scale. So I had a handful of resources offshore, a handful of resources onshore. Quickly became a big team. You try and imbibe your culture and values, and so many meetings to make sure employees, from their perspective, the morale is high. But it was really transactional, right? It wasn't a
Hmm.
long-term wealth building aspect. And the number of hours that I was putting in, it was more self-employment, small business, than actually being an entrepreneur. When I think of a Fortune 100 company, right, if you think about the C-suite, they're what they focus from a time perspective is completely different from senior management, middle management, frontline employees, etc. So you cannot have a multi-tier system, or at least I couldn't do that in the residential flipping space. But it was a struggle, right? You can't just exit something that's so profitable.
Right.
And at that stage, I actually found a coach, a performance coach, and I hired that person, and he really refined my mindset and said, you get to come down that mountain to climb up another one. It's going to be hard, but there is something that is your true calling that you got to aim, and you know it in your heart. And so with those words, I actually completely shut it down, the whole business, and jumped right into multifamily investments.
Yeah, I think that's a good point too, man. I mean, whenever you want to venture into something new, I'm getting a coach or a mentor or someone that's done it before
Yes.
really expedites the process.
Yeah, absolutely. I wouldn't do it anywhere else but with a coach or a mentor, right? And the reason is not only expedited, right? I like to have more than one coach or mentor. I always, at this moment, even I have two or three coaches and mentors that I have subscribed to. And the reason is some people would teach you about mindset, some people would teach you about business. And within the businesses, everybody has grown organically to evolve their structure and processes. So again, coming from a
Mhm.
consulting background, you want to leverage when a CEO in the consulting world asks you, hey, what are the other banks doing if I'm a bank? Or what is Amazon doing in customer service that I could look at? You really have to look at it holistically across the board on trends and how things are evolved. So learning from two or three people allows you to build your own structure and say, these are my best practices. This is what I want to automate. This is what I want to keep manual or relationship based, whatever the case may be. So that's been super helpful.
Yeah, and it's good to get a couple different perspectives too, because sometimes you might get pigeonholed into one mindset if you only listen to one person, then you find yourself a little bit lost.
Yeah. Yep. Exactly. Flexibility is the key, right? In terms of any sort of business.
For sure, for sure. So, like many of our listeners, I think you still have a full time W 2 job. Is that right?
I do. I do. I'm a senior vice president at Wells Fargo Bank.
How in the world are you able to balance that with all the stuff that you just mentioned? I mean, from the flipping business that you were obviously doing a
Yeah.
lot of transactions with to, now as an active commercial, passive and active real estate investor.
Yeah, it was a relative use of my time, right? So when I was in the consulting world, there was a lot of time spent intercity or interstate or intercountry travel. And then you were at the client site for 12 hours. After the client's gone, you as an internal team are doing meetings. So 60-hour weeks was something that was just normal or minimal. uh, and when I moved to the financial world, I have a full-time admin, a great team. So a respectable work-life balance was achieved where I could work remotely, even pre-COVID,
Mhm.
drop my kids to school and do all the things that made the most sense and were important to me. And that allowed and freed up time because I have 5-year-old twins. So we've kept them on a regimen of during school days, they sleep by 7:30. So
Yeah.
so from that 7:30 to 12 a.m., it's an amazing amount of hard work. Most days my wife and I are sitting laptop to laptop next to each other, music or something going on, and we work really hard, man. That's the only way to do it.
Yeah, just work really hard, man. I mean, you've got to figure out, when you can carve out that time to
Yes.
get the ancillary things done that you need to get done.
Exactly. And it's a sacrifice for something that is your true calling, right? It
Hmm.
doesn't seem like work when you enjoy it so much.
Right.
And then when you want to take time off, are you taking it for vacations or are you taking it to do due diligence on properties? There's so many give puts and takes and tough decisions as a family that you have to make. But if you do that for one season, whether it's 1 years, 2 years, 5 years, whatever the case may be, and that's your goal is to achieve something, in my mind, it just, collectively, if you're aligned as a family and do it, then after that, life is golden.
Yeah. And, if you're like me, and I'm sure you are, it sounds like you are. I mean, we put in an incredible amount of hours of work a day. You're talking about the 60 hours. I mean, we put way more than that a week,
Yes.
but we're doing
Yeah.
something that we enjoy doing. So it doesn't feel like
Exactly.
we're just, slaving away at a job or something. Like we're actually enjoying what we're putting the effort into.
Absolutely, man. I could go on 24/7 in talking about real estate, and all my friends would tell you that. And that's the calling, man. It's so much impact. Each community, you go in there, you meet the tenants, you have a vision for how that community could be upgraded for the people who live there, families, how many of the lives you're touching and impacting. That to me is just unbelievable that this type of investment can bring versus any other asset class, right? Any other asset class, you're doing commodities and transactions and earning money, which is fantastic, and should be a good goal to bring your financial freedom. But this gives you that cherry on top of getting to impact and meet people who are impacted positively by the work and sweat equity that you put in.
Yeah, for sure. I think that gets lost in the shuffle a little bit. I mean, whenever we're transforming these communities, the tenants are really benefiting from turning these things around and giving them a better place to live and a better place to raise their kids and just a
Yeah.
better life in general.
Yep. Yep.
So during your career, did you have kind of an aha moment where you started looking at alternative investments and really got into, I guess, flipping to begin with?
Yeah, I speak about this all the time. It was a tragic day for my family at that stage. Turned out to be a very lucky day. But I was consulting up north and up in Boston, working long hours again, traveling Monday through Thursday at the very least, if not Friday. And when my twins were 1 years old, my daughter had a skull fracture one day. So got a call from my wife, multiple calls. You're in a meeting. After two or three calls, you're like, oh, there's something going on. And so I stepped out. I picked up the call, and immediately the ground was shaking, right? And you didn't know what to do. So tears in my eyes. I'm
Goodness.
trying to tell my clients, hey, I gotta head home, drive to the airport, find the next best flight, and reach home physically. Unfortunately, she was fine. Didn't need any surgery or naturally healed the fracture. But just that trauma made so much determination in my mind, where I was chasing a ladder from a corporate structure standpoint. And it made me introspect really seriously and say, is this how I want to spend time with my family? Is it how I want to spend time in this world, whether it's 5 years or 20 years, whatever the case may be that I'm here? What is the highest and best self that I could achieve,
Mhm.
and where do I focus my time on? So that led me to slowly, it was an overnight thing by any means, but slowly bring the conviction to stop that consulting gig, joined the financial world, and then led me to start this as well. So I'm thankful and grateful that that big seemingly tragic moment at that stage allowed me to pivot to what I believe would be an amazing life for my future.
Yeah, yeah, that's an incredible story, man. It's unfortunate that that had to happen for that to kind of click in your mind, but
Yeah.
luckily it turned out all right, and you're a better person, and your family's better off for it.
Yeah, absolutely.
Yeah. So especially since you've done both and you're working full time and you've worked full time and done the flipping and now the commercial real estate. I mean, what are your thoughts about active versus passive real estate investing? I mean, some folks that are listening to this are thinking about getting into passive investing in these commercial deals, or they might be thinking, hey, I'm pretty interested in this. I want to do the active side. I mean, what are your general thoughts on that?
Yeah, it's what's your goal, right? You got to start with a clear vision, right? If you truly love what you're doing as a passion, if you're a lawyer or doctor or something like that, and you earning tremendous amount of high income, you want a great diversified portfolio to invest money in, then potentially passive investment is the best vehicle for the time being and that season of your life. I know a lot of doctors who did 35 years of just their medical practice. And when they retire, they bought 3 office buildings and turned it into WeWork like facilities and sat back, right? Because the world of real estate, you can invest at 80 years old, right? Doesn't need to you don't have the larger buildings and commercial assets. You're not there with the hammer and the nail and trying to fix stuff, right? You
Mhm.
have to manage a lot actively, and it's a lot of effort to do it. It's not discounted, but what where is your vision and what season of life are you in, right? When my twins were 1 years old, I probably wouldn't have done what I'm doing in the commercial side because I wanted to focus on spending time with them and frankly, not staying sane with
Yeah.
with changing diapers and stuff. So that was a season I had over the last couple of years. As they grew, they've freed up a lot of my time to focus on things, and potentially when they go to college or are in the teens and more self-independent, then it'll be more time of mine provided to this. So that's where I come from is, don't, if you want to build your life in your terms, you got to start with where do you see yourself 10 years from now, 20 years from now, and backtrack and see what you want to do.
Yeah, that makes a lot of sense. Now, going back to what you're talking about, the doctors that bought the office buildings, I've heard a few different nightmare stories about lawyers and doctors that have bought commercial buildings just kind of out of the blue, and they don't have any real estate experience at all. And
Yeah.
they lose their ass because they think, hey, we're smart people, we can get this done. We can definitely
Yeah.
run a real estate business. And then it's a mess.
We love those sellers. Because I can buy those distressed properties.
Yeah.
No, that's true. Right? That's where I had to shift my mindset to. Right, I own a single family portfolio, and in the single family one, you own one asset, you give it to a property management company, they charge you $100 or $200, whatever the case may be, and you've got one tenant, and if the tenant's great, stays on for a few years, then nothing much to do, right? There's no phone calls if you have a good property management company, nothing. So it's a very autonomous business, and that's why it earns, in my mind, less returns than a commercial space
Mhm.
from an investment standpoint. So if you take that same model and assume that if you're out of state and you can just plant a property management company and let them run the business without any incentives or metrics or KPIs to drive towards, you're setting up yourself for failure, right? And so you really have to have someone as a partner to be the operational expert to make sure that on a weekly basis there is call, there's KPIs on what's happening. The property management team in this case are your tactical team, right? They might be
Mhm.
looking at what's happening for units that are vacant right now, but who's going to look at, hey, next quarter we're going to get 20 leases that are coming up, right? What are we doing from a marketing standpoint? So you really have to think like a CEO or a management company to manage the property management company. And that's the part people forget. That's a lot of work, right? It's not just finding a deal, it's not just selling the asset at a profit and in a
Mhm.
great market. It's the actual 5 years of work to renovate, to make sure the tenants have the right things, to manage the property management company, to inspect physically what's going on, and to continuously raise the bar from both from the actual property standpoint and wherever your maximum profits come from, right? The ideas, because you have a fiduciary responsibility, unless you're just putting your own money, to other investors that have subscribed to your investment, to make sure their returns are maximized as well. So, yep, we've come across a whole bunch, and like I said, we love we love those kinds of sellers.
Yeah, I mean, you just got to be careful. I mean, a lot of people say you should invest passively first, kind of get the feel for
Yes,
things, see
yes,
how the deal works, and then if you want to take it a step further, then maybe go into the active side?
Yeah, we did it three steps, right? We did three investments passively with three different projects that allowed us to see how things work, right? Who does the best reporting? Again, it was to build our own business, but
Yep.
who is the most communicative? Who had the most conservative estimates? Which markets are the right ones for us? So we evolved our thinking. The next three deals we did, we were active, but we actually were okay being junior partners because we wanted to learn the next level of granularity on weekly calls and working with property management firms. Again, all three deals with three different partners.
Hmm.
And that allows us to now bring three different best practices and build our own business the way we want to. All future deals we will be doing ourselves as soup to nuts, the lead sponsors, and finding the deals ourselves, running them ourselves, and maybe bring a couple of junior partners who own 3 4 thousand units that allow us to have that bat phone, to make sure that operationally we're doing everything the right way.
Yeah, I love that, man. Just take the best pieces of each deal and each thing that the sponsor does right, and then implement that into your own business plan going forward.
Exactly.
Yeah.
Exactly.
I mean, I hear you talk about against the grain investing all the time. So tell me a little bit more about that and what that actually means.
Yeah, absolutely. So what I've seen in the market is, most people when they start investment, again, they might not have the time. They're trying to get into action. They're not getting, trying to not get overwhelmed with all the webinars and 3-day meetings and events that are going on, right? A lot of
Yeah,
information funneling
lots.
to you, right? And you get lost. And sometimes you get frustrated and you're like, all right, I need to do something. And so what they start with is, hey, these are the 20 top markets in the United States. And here's what my deal criteria is: 1980 or above, cookie cutter, right? That's what I call it. And if you stick to that criteria, you are against 60 other people, institutional buyers, depending on the size of the asset, that are
Hmm.
trying to buy that asset. And in my mind, you cannot help but overpay, right? The risk level in a multifamily investment profile should be lower against all the other investments. And in this case, the risk level becomes a little higher, right? Because you're overpaying the
Yep.
asset and something could go south. So you don't have enough contingency in your plan built for that. So our philosophy is, well, are there other markets beyond the top 10 that have, might not have a declining job population, but they're a great, or might not be growing 5%, 10% every year, but are they growing 1% or 2%? Are they steady enough with diverse jobs where people still want to live, right? This is a core asset. People want housing, people want great housing, and older houses and apartment communities are not being built that much. So we look at that as one philosophy. We look at heavy value add or distressed, not just stabilized 95%. Again, you paying that retail premium for buying something that other people have put in the sweat equity to get it to a stage, right?
Hmm. Yep.
And done for you, right? And you're just running it. So we try and buy something that is true value add, putting 10, $15,000 takes 2 years to turn, 60, 70% occupied. That's the other philosophy. And then we look at other asset classes, right? People say, oh my goodness, office is done. Well, that's great. But what if it's an office of FedEx employees, right? If it's
Right.
a call center, right? Are they going to come back, right? So if it's leased up for the next 10 years and people are panicking and everything from a valuation standpoint is going down, can you make enough money, right, without assuming too much risk? So our philosophy is, if we want to scale and be consistent with above average returns for our investors, we have to look at assets that we're not just one of 60 people and trying to just say, oh, my relation with the broker is the best and my price is the premium,
Yep.
and that's why I'm going to get this deal. That everybody can do that, but sometimes the music can stop, right? We've seen
Right.
that in 2008. and you don't want to be the one holding that hot potato because you just paid so much premium to the price, thinking 3 years from now that asset value is just going to keep on going up. So that's where we call it against the grain, but in my mind, that's the only way we should invest.
Right. And really, there's a creativity portion to that, right? I mean, you've got to get creative nowadays, especially in a hot market. We're probably towards the top of the market. I mean, it might continue here. Nobody
Yeah,
really knows the future, but it's,
yeah,
it's about being creative so you can get a good deal, so you can make this thing work, even if the market does make a little bit of a turn. If you get it right, then it's going to work
exactly.
anyways.
Exactly. And the creative financing side, you just hit pretty well on that. We look at that as well. Is the seller willing to keep a stake in the asset? That's the first question we ask, right? Well, they
Yeah.
want X. Great. Can they carry 20% of paper
Yeah.
if they want X, right? Because then your
Yeah.
debt side of the equation, the game and the math completely changes if they say yes to something like that. So
Yeah.
again, yeah, creative aspects, finding the deals that there are only 10 people bidding on it rather than 60 is what
Right.
what we aim for.
Yeah. And speaking of against the grain investing, I'd love to hear your opinion about investing in traditional assets like stocks and bonds or mutual funds versus, especially nowadays where that stuff is flying through the roof right now, for good or for for good or for bad,
Yeah.
versus alternative assets like commercial real estate.
Yeah, my personal experience has been really bad, right? And so whenever I have timed the market cycle, I've mistimed it from a stock perspective. So
Yeah.
I've lost money, right? And I don't understand when I ask someone a question, well, why should Amazon be $4,500? And they are like, well, that's because they're selling a ton of money or a ton of products. Well, that's great, but what does it make it go from 2,000 to 4,500 for selling? Are they selling two and a half times? What have you done in terms of research? And there's none, right? So that scares me
Yeah.
because I've earned money really, really working hard. And so I shy away from those kinds of investments personally. A lot of people put a lot of effort, and it's a great diversification strategy for a lot of people. So again, it's a competency. If you treat it as a business, if you take the emotions out, if you're sticking to trading with data analysis, or somebody else has the research done and they're giving you some sort of information to help you, whatever the case may be, then yeah, you can buddy up or spend your time. For me, my full time with the job, with my family, and commercial real estate, that's where I want to spend and focus my time.
Gotcha. Gotcha. Love it, man. Well, let's jump into the Freedom Four.
It's time for the Freedom 4.
What's the best thing you do to keep your mind and body healthy?
Mind, I meditate for sure and
Love it.
listen to Alan Watts and try and read some books at a time, but more listening to good lectures around meditation or just silencing the mind. Body, it's good amount of walks, and I've not been my healthiest self yet, but we'll get there.
Yeah.
Maybe join the burn boot camp.
There you go. Well, 2020 has been pretty rough. It takes a
Yeah,
lot more effort this year to stay at your tip-top shape.
yeah, yeah.
In an alternative universe where you weren't involved in real estate, what would you be doing?
In an alternative universe, I would have my own real estate fund for sure. It'll be great to leave some of the inefficiencies of gathering capital out of the picture and really helping communities the way I want to, and shape them.
Gotcha. Well, I think that's still real estate, but I'll give you a pass there, brother. Where were you at 5 years ago, and where do you see yourself in your business 5 years from now?
Where was I 5 years ago? I was with my consulting company, Accenture, trying to be a managing director. And in 5 years, I would have at least $1 billion in assets under management.
I love it. Love it, man. How's passive income made your life better?
It's made me think about freedom very consciously. And the vision and goal for our family now has changed. And the vision and goal for our family is our biggest personal expense should be vacations and experiences,
Mm-hmm.
and my biggest professional expense should be masterminds and mentorships. So that's different from gathering material things or buying the biggest house or anything of that sort, which
Right.
when you're in the rat race, you're kind of keeping up with the Joneses.
Mm-hmm.
So we're glad we've evolved from that standpoint.
Yeah. I like that, man. I mean, I always try to take at least one big long vacation a year, but I'm trying
Yeah,
to get that into like 2 or 3. When I mean long, I mean like 3 weeks.
yeah,
Whereas most people that have a W-2 job can't do stuff like that.
exactly.
Yep. Yep. All right, man. Well, it's been great. Where can our listeners find out more about you?
Yeah, they can. I'm pretty active on Facebook and LinkedIn at Hemal Badiani, and then our website is www.exponential-equity.com.
Awesome, brother. Thanks again for coming on.
Yeah, thank you so much. It was a pleasure speaking with you, and hope you and your listeners got something out of value. And happy to reach out to anyone from your world that reaches out.
For sure. Oh man, incredible how quickly Hemal has scaled and the amazing things he's accomplished in such a short amount of time, all while working a full-time W-2. And I love his concept of against the grain investing. See, you can do it too. It is possible and even probable if you surround yourself with the right people and focus your time, effort, and dollars. That being said, I'd love to chat with you guys about how you can allocate your time, effort, and dollars to create significant cash flow and wealth so you can practice when you want to, not because you have to. Start by going to escapethebillable.com to get our free passive investing guide and to join our Esquire investing club at passiveincomeattorney.com to gain exclusive access to educational content and our investment opportunities. Have an incredible day, folks, and celebrate the journey.
Thank you for listening to the Passive Income Attorney Podcast with Seth Bradley. Do you want more ideas on how to generate multiple streams of passive income? Then jump over to passiveincomeattorney.com for show notes and resources. Then apply for the private Facebook community by searching for the Passive Income Attorney on Facebook. And we'll see you on the next episode.